All right, welcome back. We're coming to you live from the CNBC-TV18 News studios, 9 o'clock, which means the market is ticking. Prices have started to tick. The pre-open is with us. So let's just quickly take a look at what is happening. The first rates are on your screen, the Sensex and the Nifty, a little all over the place. Give it a minute, 2 minutes, and I think things will settle down right now. So that's the Nifty. Let's have the rupee up as well. For a quick bit and see what's happening there. So as I was pointing out, the Asia dollar index last night has seen a big break on the downside, which basically could put pressure on Asian foreign exchange. We've got the start, which actually is pretty good, 82.48. That's the first tick which is coming through. And I think the close yesterday was 82.67, and this is a very good start, 82.49. So keep an eye on the currency as well. Deven, of course, is still with us for a quick comment on things. So Deven, yesterday we had the entire Adani Group stocks all surging, right? I mean, Adani Enterprises, for example, was up 14%. You had Wilmar. I think about 5 or 6 names from that group were up. And up significantly. What did you make of it? And any prognosis on what happens from here out for that pack? Go on.
Yeah, Prashant. I think luckily this particular situation of addressing the bondholders, addressing the investors by the company has now started on a one-on-one basis. And that is where possibly I think the confidence levels have started coming back. Fortunately, I think you have a business model in case of Adani Group of companies, which is absolutely remaining very strong and robust. As such, I think they are generating higher amount of EBITDA at a CAGR of around 22% on a year-over-year basis. And at the same time, I think even if you consider gross debt and net debt, I think you have the visibility of 4 years, 4.5 years to repay that kind of a debt from the EBITDA that they are generating at the current level. I think this message has gone out well, and with the assurance coming in from the company that they are right on the track as far as repayment of, I think, their loans are concerned. That has gone out well. So business model-wise, I think the questions probably are not arising. The questions are still arising on the side of the why the stocks are being sold by the existing investors. I think that probably answer is not immediately coming. But yes, I think yesterday at least it was a breather day. Maybe I think that particular fall has arrested because of, I think, this expectation coming from the company. That brings up a point, Prashant, that I think whenever such kind of exceptional situation happens, I think the company and the regulators definitely, I think, have to pitch in and put across, I think, the message clearly to the investors before waiting for a very longer period of time. I think this is a validation of what they did. I think they actually gave confidence to investors by coming in, though late, but I think they did come in. I think they gave the confidence.
Okay, all right. Deven, I wanted your take on Dixon Technologies. So that's the momentumizer stock for today. We just want to quickly ask you about that. In the last 5 days, well, it's done a relative outperformance in comparison to the Nifty. The Nifty is down 2%, or the stock is up close to 7.5%. So that's close to under 10% outperformance. The delivery data yesterday was much higher than normal. Even on the traded volumes was much higher. So that up move that we saw yesterday as well came on rather good volumes and backed by good delivery. In the F&O market, there was a bit of a short covering bounce that did play out, where the stock ended higher, the open interest was lower. And finally, valuation-wise, well, it trades at around 30, 31 times odd. At its peak, it was more than 50 times. So some sanity coming in on the valuations front as well. Deven, before we let you go, any view on Dixon Technologies?
So I think what you explained, Nigel, I think is absolutely the point. The technicals of the market have possibly started working in the favor. Higher delivery volume, which we have experienced. That is one thing. Maybe I think this is the reason for which I think the markets are basically favoring this stock. I don't think that the fundamentals beyond the point have changed for this company immediately. And valuation, since it is corrected, so maybe I think some amount of delivery-based buying has taken place. But no, not very sure about how the fundamentals have changed overnight. They have not actually.
Okay, thanks a lot for that. That's our momentumizer, Dixon Tech. It has been in focus. The last few days have been pretty good as well. But Deven not too convinced. Deven, thanks. So we'll just come back to you in a bit. The pre-opening rates are settling now, and they're settling higher. So let's see, after 8 days of a fall, is the 9th day going to be in the green? Time will tell. But we are seeing pullback in a lot of heavyweight stocks, whether it's TCS, Reliance, ICICI Bank, Hindalco, Tata Steel, all in the green right now. Whether that sustains, that's the million-dollar question. Sneha Seth, who's the derivatives research analyst at Angel One, joins us now to give us some cues in the F&O space. Sneha, good morning and thanks for joining in. Tell us a little bit about what the prognosis is for today and for the month of March, and what are the stocks you're looking at?
Very good morning, Sonia. If you see, Nifty has been correcting, and we have seen decent short positions in the Feb series as well in the couple of last 2-3 sessions in the March series. So if you see the overall, these short positions are too heavy. If you see FI's positioning, their long short ratio, the index futures long short ratio is around 15 now. And at the same time, if you see the put call ratio, it is around 1.67, which is very low. And it is said that it is clearly indicating that market is a bit oversold. For now, I think 17,200, 17,100 is the immediate support zone. On the higher side, if we surpass 17,400 on the closing basis, that will be a very good indication for market, and then we can see some sustainable upside move. Banking index is supporting, so I believe banking index should be outperforming over here, and any respite in banking index will support the Nifty to move towards 17,400, 17,500 in the next 2-3 sessions. So we need to closely watch banking index for now.
And any individual stocks?
In individual counters, I'm liking 2 counters. First is Crompton Greaves. If you see, this counter has corrected and it is recovering from its 52 weeks low. If you see the monthly chart, it is precisely moving up from the 89 EMA, which is the support zone. So I believe here the risk reward ratio is very good, and I think at current levels one can go long. If you talk about the stop loss should be maintained around 291, and the target will be around 318. Apart from this, we are also liking REC Limited. If you see, this counter has corrected recently, but it has come near the support zone of 110, 111 zone. So I believe at current levels we can go long in this counter. The stop loss should be maintained around 111, and the target will be around 122.
All right, thanks very much for that. You know, I just want to revisit a chart I put out yesterday. I mean, yesterday actually we put out 2 names. One was ITC, the other was Escorts. So Escorts is the one that I want to just revisit. The stock ended up about 5% in a market which was down and out. It was Escorts basically, it's the same chart, it's just been updated for yesterday's candle, which is the last one, which is a meaningful one. So the question is it taken support? I mean, we were asking the question whether it's a make or break time for Escorts. With yesterday's candle, can we say it's made it? I still don't have the answer, but I think it did take support exactly at that level. We put it out before market open yesterday. It took support exactly at the trend line and then gave you a 5% move. The high, by the way, was 21.28. It closed off the high at about 20.75, which is the close yesterday. This is also interesting because, I mean, we heard this call on M&M. Sonia put out the call on Mahindra, another tractor maker, also a tractor maker, where CLSA, I think, has upgraded their call. Maybe we can have the M&M sort of chart as well and put both of these to Mitesh. Mitesh, any thoughts? Escorts and Mahindra & Mahindra.
So, Prashant, on Mahindra & Mahindra, I think, one important observation which every trader needs to make is, if you look at the last 6 months of data, starting from August of 22, we got a closing low of 1226, and then, on about 12 occasions that level is held, and the 200 average is about 1224. So I think that becomes a very strong buying zone for M&M. Until that has been broken, expect that the level will keep giving you throwbacks. Escorts, while the support level has kind of given you a bounce back, I think a reversal will happen if we start getting past 2150. So to be absolutely sure that the trend line is holding and the stock is ready to get into some kind of an up move, I would want to see it get past 2150.
All right, let's also get some 9-10 calls going now. In fact, M&M is up almost about 0.5% post the CLSA upgrade. So we'll talk more about that. By the way, the first set of auto numbers are trickling in for the month of February. That's Escort sales, looking pretty good actually. We'll try and compare them to what they did last month as well. But year on year, the numbers are looking good. It's a 27% growth that we're seeing in Escorts. That's the prima facie, the first number at 7,811 units. But Mitesh, what's the big call at 9-10 this morning?
I'll go with the buy on Berger Paints. Keep a stop below 569. 600, 605 should be the target area.
And Sudarshan, how about you?
Well, Ultratech Cement, that's a buy with a stop under 7160, 7160.
Okay, thanks a lot for that. Well, we'll see you guys in a bit. For now, let's also talk about what's happening in the banks. Nitin Agarwal, the head of Banking, Insurance and Financial Research at Motilal Oswal Institutional Equities, joins us now to give us his view. Nitin, before I come to Axis Bank, which I want to talk about in great detail, overall, what's your view on the banking space? Do you think the selling worst of the price damage is behind us? And what is the prognosis on both private and public sector banks for the rest of the year?
See, I think the space as a whole overall looks good when it comes to the earnings progression. Though the growth as such, earnings growth will moderate in FY24, and we cannot really relate it to how the trend has been in the past 3 years when the sector was growing around 45 to 50% CAGR. And but even 17-18% CAGR that we are looking at as such is not bad over FY24 to 25. But banks as a sector, as you know, is more to do with macro also, or rather as much to do with macro as much as it is micro. So while the micro is in place, but I guess the macro is overweighing the micro as of now. And which is where the visibility around the rate cycle, the inflation, and some of the other key metrics like growth and margins will be an important factor to look at the sector performance.
All right. Hi, Nitin. Good morning. Nitin, but how do you approach the space? At one point of time, it was a consensus buy. We've seen a lot of these stocks coming off the top. So as of now, what's your top buys that you'll have from the private as well as the PSU banks?
So we continue to like the large banks. We believe that they are well placed in this environment to navigate through the challenges that the system is facing currently. And the deposit franchise also is quite strong. And with the 17-18% growth outlook that we are building in for these private banks, we continue to like Axis Bank, ICICI, and amongst PSUs, we like SBI. So these are amongst the three.
Sure. For Axis Bank, after the acquisition of Citi's India consumer business, can you tell us, I mean, we of course know the numbers, 3 million unique customers, they can grow their cards business by about 2.5 million cards, etc. But, just tying it in with the stock moves, can you explain to us what the benefits would be?
So clearly this deal is beneficial for Axis in the sense that besides all the growth in these chosen business lines, select business lines, be it around cards or mortgages, it gives you the access to the city's franchise and the city's processes, what it has, and which are like industry leading and amongst the best in the rather the industry, and which is what Axis can learn from and replicate in its own business, and that will help it to scale up further in its operations. And so the deal amount also is a tad lower versus what it was agreed upon earlier. And so I think the payout and everything will get done this quarter, and that will reflect when they report the 4Q results.
All right, Nitin, we'll leave it there. Quick conversation today. Thank you very much for your time. Star Health is the standout stock today, standout brokerage note today. Nimesh is here with that. Nimesh, morning.
Morning, Prashant. So CLS has to upgrade the stock to a buy, and they've sharply raised the target price to 700 versus 570 earlier. Now, the key reason they've upgraded the stock is because the company has taken a 25% price hike across 50% of its book, including renewals, and they're also exiting the loss-making group portfolio. Both combined will mean a 1.5% YY improvement in the loss ratio for FY24. So, in back of this, CLS has upgraded the EPS estimate by 7% for Star Health. Now, they also expect ROE to improve by 300 basis points under the new accounting method. The only risk CLS sees is the competition from the life insurance players. So, while it is bad news for the consumers, good news from a shareholder point of view, and that's the reason why CLS has upgraded the stock to a buy now, and they raised the target price to 700 versus 570 earlier.
All right, and Nimesh and I both have been in the receipt.
Yeah, exactly. So you can see where it is coming from, right?
Just yesterday we were talking about these price increases as consumers and significant across the board. And but that's the other side of the coin, right? As a shareholder, it makes money. As a consumer, you shell out more. But I guess out of one pocket into the other pocket if you're a shareholder. Anyways, thanks very much for that. That's Star Health for you. We'll see how the stock reacts. I think, but we're into market opening. Just about a minute or so to go. Sonia.
Absolutely. And it looks like it's going to be a decent opening, right? So hope springs eternal, as they say. The Nifty is up about 50 odd points. That's the first tick on the index. The Sensex is up 150 points. So the pullback definitely has come through. But whether it is sustainable or not, let's wait and watch. For now, the Bank Nifty is decent. It's a 150-point opening in the green. What's leading the market higher? Adani Group stocks, Adani Enterprises, Adani Ports. There's a pullback there. Axis Bank, post the completion of that deal, is up 0.8%. M&M, post the CLSA upgrade, is up about 1%. Tata Steel is in the green. JSW Steel, so metals are coming back. In fact, today is a good day for autos. Escorts reported a decent set of numbers, and the management commentary was also quite strong. So do, just get the Escorts chart up. It's absolutely flat at the moment, but the other auto stocks are doing well. Maruti is up in the green. Eicher Motors, Tata Motors are all holding up quite well. What's dragging the market is life insurance companies. SBI and HDFC Life are both in the red right now. Then you have ITC, Tata Consumer. So just, taking a step back, these consumption companies, Britannia are all in the red. Dr. Reddy's, BPCL, Nestle are also a tad bit soft this morning. Nothing alarming, really. Otherwise, it's a good opening for the market, you'd have to say. Even the mid-cap end of trade is up about 130 points. The market breadth is positive at over 1,500 stocks on the advancing side. And I think the bulls are going to like this. They're going to clutch it with both hands because it's a fairly decent opening. Now holding above the 17,360 mark on the index. Well, the 100 DMA is still far off. I mean, 18,000 is the 100 DMA, and the 200 DMA is around 17,384. So we're just about getting back to the 200-day moving average on the index. So let's see how that shapes up. But good opening for the market, 80 points higher now.
Well, that's right. And for starters, the Adani Group has opened up in the green. So Adani Enterprises is up another 7%. You have Adani Power that's up close to around 5%. And Adani Wilmar as well is locked in upper circuit with a gain of close to around 5%. Some stability in the Adani Group stocks. That's what bodes well for our markets. Even the Nifty, as we speak now, we have taken out that 200 DMA odd. We're just trading above those levels. So the hope is that we hold on to those levels. In terms of stocks in the broader markets, Bombay, Burma, well, they'll be selling 8 estates to Orange County Resorts for a sum of around 300 crores odd. So that's opened up with a gain of around 1%. Power Grid, they won a project in Gujarat, so that stock as well should come up for you on the screen. And Moil had gone ahead and affected some price increases, so that as well is marginally higher. Let's pull up the real estate stocks. There is some slowdown in terms of registrations, as Sonal told us. Some of these stocks have already pulled back in the last week or so. Macrotech, Oberoi, Keystone. Let's get the initial takes up for you on the screen. Remember, they've corrected a goodish bit from the highs. And delivery, I think we're waiting for that deal to take place. I think it's already taken place. That one, in fact, is down close to around 1.5% for starters. So keep an eye out on that. And Federal Bank as well, in reaction to its numbers, to its call that they had yesterday and the meeting with analysts. So that's opened up marginally in the green with a gain of around 0.5%. It's a good start to trade. The bulls will take it with both hands. The question is, can we sustain this kind of a gap up? Well, it'll be great news for the bulls. 8 sessions on the trot. We are lower. Will we get the 9th session lucky? Time will tell.
I mean, about time we got that bounce, right? So we'll see. 80 points for now. Things are looking, much better as compared to the last couple of sessions. I mean, one thing is absolutely clear. The market has become lighter. A lot of the froth is off. So that is what is perhaps going for the market. In terms of compelling reasons to jump in and buy the market overall, that may still be some time away, but it's become lighter, and sometimes those things also matter. The Bank Nifty, of course, is doing better than the Nifty. As we've been pointing out, the last 2 days, Nifty Bank has done better. We'll come back to more specific stocks, etc. in a bit from now, but we're at almost 17,400. Ashwini Agarwal is founder and partner at Demeter Advisors. He's a market master of the day. Ashwini, great to have you with us here. Thank you very much. Just on that near-term market direction question, Ashwini, what do you make of it? How much of the froth is out of the system? And, does it provide grounds for the markets to see some pullbacks? What's your sense?
So, Prashant, I'm not a great one to be able to predict short-term moves at all. But like you just said, that a lot of the positioning has become very light, and the market's seen a pretty steep correction over the last 7-8 days. So, in the near term, can we see a pop? Possibly, yes. But I think, from a more medium-term perspective, if I were to zoom out and talk about this year on the whole, it will continue to be a very challenging year because of rising rates and slower growth. And those two factors will continue to weigh on the market sentiment. I'm not suggesting that there's a massive amount of downside from here, as the positioning is quite light at these levels. But I do think that large increases from here will attract more profit taking. That's what I think.
Okay, well, Ashwini, good morning. You know, the big theme that's playing out is this consumption slowdown, right? I want to understand what are the ramifications that this would have, both in terms of growth, earnings. Are we expecting to see more earnings downgrades from here? Because Q3 wasn't quite impressive. What is your own expectation of which are the pockets that could get hit the hardest?
Sonia, great question. Obviously, you know, like you said, the December quarter was fairly disappointing. And the way I'm thinking about this is that we have challenges at hand, which include higher rates, and that translates into probably higher mortgage payments or higher installments on loans for a lot of the borrowers. And at the same time, what we are starting to see is extremely hot weather. And if this will impact the harvest, and it will impact the outlook for the agricultural output for the next 1 year is something that remains to be seen. But we are experiencing extreme weather in several parts of the world, including Europe and the US, and we are seeing that in India as well. So my worry is that in addition to higher rates, which are obviously impacting consumer demand, as was visible in the December quarter, we've got other factors to contend with. So my sense is that, you know, we need to be cautious. And I'm cautious not just on the staples, which have taken the brunt of the slowdown in the December quarter, but even on the discretionary spend, because I think higher rates is going to eat into some of the discretionary spends as well. So, you know, whether it's automobiles, whether it's real estate, you know, in some sense, these are all rate sensitives, and I would be careful about them.
All right. Hi, Ashwini. Just hold on to that thought. You know, we have Bajaj Auto's numbers that are coming up for you on the screen, and actually they're as bad as expected. Expecting a total sales degrowth of close to around 10%. It's coming a little bit worse. You know, there's 11% degrowth out there. Domestic sales continue to see some growth. The problem is in exports, and that's played out yet again. So we'll get the management in just a bit, and Sonia as well will give us a quick analysis on that front. But exports are down by 38% on pain being seen in the exports market. Let's see what the management can get for, but disappointing, a little bit more disappointing than what you're working with.
Oh, absolutely. And you know, 1.27 lakhs is the export number. Now, on an average, they would do about 1.4 to 1.5 lakhs in the preceding months, ranging from August to about November. It's only in the month of January that we had 1.12 lakhs, and now in February 1.27 lakhs. So there's a clear slowdown visible in the export market, and the management has told us several times that, you know, things have been looking weak for the last many months. That's the export number. As you can see, the preceding months between August and November rather, 1.4 to 1.5 lakhs was an average, and now that has slowed down in the last 3 months. Ashwini, this is the problem, right? What's happening with some of these export markets like Nigeria, Egypt, the currency devaluation there. There's a massive slowdown in Europe that's still underway, although energy prices have cooled off. This entire pocket, do you stay away completely? And which are the segments or which are the stock sectors that could be affected even henceforth?
So, I mean, I don't know whether you stay away from it, you know, completely or at one point in time, but specifically to autos, I would say that, you know, the domestic focused auto plays are probably better off. And I would say follow the market share. And I think those two themes have kind of tended to protect investors over the last couple of years, and I think that will continue. Overall, I continue to be fairly cautious on autos because, you know, as supply resumes, or rather the semiconductor shortage issues get put behind us, and as demand slows down, you'll probably see an expansion on discounts. So that's something that worries me in autos. So personally, I would stay out of auto. So your question is, where does one go? I think, you know, it's time for the boring. Look for dividend yield. I'm reasonably optimistic that the utilities will actually not lose you a lot of money, and you at least make the dividend yield and a little bit more as you go further into the year. Telecom is another area where, you know, I'm a little more constructive, simply because I think the pricing is holding up. And as 5G rolls out, that will give another leg up to pricing. And I also think that, you know, the discussion that the regulator is having about OTT having to share some of the revenue with telecom companies will be a nice support. I don't know how big that can get. It's anybody's guess. But something is better than nothing, I would say.
All right, Ashwini, you know, when you talk about dividend yield, a lot of these government companies come to mind, PSUs, and they get a bit of a discount. Do they provide some solace in this sort of a market? Will you look to hide in them? Because they are, I mean, big dividend yields expected. A lot of all these names, NMDC, NTPC, Power Grid, Coal India, name it, they get a lower multiple, but dividend yield is likely to continue out there. Your take?
Yeah, I think, where you see a significant dividend yield of the order of 6, 7, 8%, I think we should take a look at it because sentiment is short. And dividend yield is always a nice way to protect the downside, which is what I would look to do in a challenging year like 2023. And the PSUs obviously have a dividend yield as a very good support. And some of the stocks have come down a lot. Whether it's in the financial space or whether it's in oil and gas or in the utility space. I would obviously be a little careful where there is a significant policy risk of something going wrong. But where I don't see a policy issue and where I see the macro challenges to be somewhat manageable, I would gravitate towards them. Especially in the utilities area and maybe some of the financials, those look relatively more attractive. But across the board, I think dividend yield is a good theme to play.
So the market's still holding with gains, 92 points. And maybe a good time to look at a few names which are doing very well. Adani Enterprises is still the top volume-led gainer, 5.5% higher. Adani Transmission has got a 4% pop on strong volumes as well. Yes Bank is the number 2 volume-traded name, 5% higher on Yes Bank. Hindalco is bouncing to almost 3% actually, 410. Varun Beverages comes up with strong volumes, 3.33% higher. Adani Wilmar, after yesterday's 5, another 5 on the upside, 370, 380, actually 379, 380. SRF is up 2.5%. Again, strong volumes on SRF. I can spot Nykaa, which is up about 3.25% at 144, 145. Jindal Steel is up about 3%. I think the China PMI numbers, which came in earlier today, they've been a beat, perhaps providing some fillip to the metal stocks, both ferrous, non-ferrous, etc. But that's the big volume part of the market, which I'm highlighting. So far, so good. 90 points is what we have on these names. Ashwini, many viewers ask, I mean, if you had to get exposure to one sort of new age company, which one would it be? All are broadly down very, very sharply, right? I mean, the degrees vary, not by that much though. What would it be, in your opinion? I mean, what do you like in that space?
So Prashant, when I was last on your show about a month and a half ago or so, I said that, look, a lot of these prices have corrected and I'm tempted to take a look at them and I will take a look at them. And I did. Okay. But I still find valuations quite stretched across the board. Notwithstanding the fact that these stocks are down, between 50 and 80%, from their all-time highs. I still think that the optimism regarding, valuations is still on the higher side. The businesses are all good. Okay. So, I don't want to take any names for obvious reasons. But a lot of these platform businesses are great. But we are still being asked by the market to pay up too much for them. In a rising rate environment and in an environment where growth is going to slow down, I want to seek downside protection in dividend yield. I want to seek downside protection in not just the price movement from all-time highs or 52-week highs, but also in terms of valuations. I think market's not going to go anywhere. So in this environment, I don't want to risk being undisciplined or indisciplined about valuations. So that's my net take. New age companies, I'm still staying away.
Okay, staying away from new age companies. We'll take that. Thanks a lot, Ashwini, for joining in. And have a great weekend, have a great week, have a great year. We'll of course speak to you very soon. But thank you for your thoughts on the market. I'll appreciate it as always. The market is looking good. The Nifty is up about 60 odd points. It's still too early to say if this is going to sustain or not. Adani Group stocks are seeing a good pullback. Axis Bank is also topping the charts. But the stock that perhaps could be under a bit of pressure is Bajaj Auto. So let's just pull that stock up for you and see how it's doing at the moment. There is weakness in the numbers for sure. The exports continue to be under pressure. In fact, exports have seen almost a 40% fall year on year. Total sales are down 11% at 2.8 lakh units. Let's get the management in. Rakesh Sharma, the Executive Director at Bajaj Auto, joins us now to talk about that. Mr. Sharma, the fall in exports is something that you have been talking about for a while, but there are some reports indicating that you've taken production cuts to the extent of 25%. Is that true? Can you tell us, in the month of February, what has the production cut been like and how long is it likely to continue?
Morning, Sonia. Yeah, I read that report, which I thought was pretty perfunctory. And, we did not understand where those numbers were coming from and what was assumed. So the Feb numbers have come in, as you can see, pretty much at the same level as December and Jan. And March is also expected at a similar level. And if I compare, not just sequentially, but if I compare how Feb and how March will probably look compared to last March, we will be around the same ballpark. So there is nothing so dramatic as that report suggested about, massive cuts. In fact, if you dive deeper into the numbers, you will see that, as we have been saying, of course, the exports has been under pressure, particularly Nigeria, which is a very large market. It is the largest overseas market for us. There, the elections, the results just got announced a few hours ago this morning. But more than the elections, the government had sort of demonetized by printing a new currency, which created huge cash shortages. So there was a double whammy, and the Nigerian business fell far more than what was expected. However, there has been an extremely strong performance in the domestic business, both in motorcycles and CV, which is almost compensated for this 40% drop, which you have just mentioned in exports. And
so,
the domestic
Mr. Sharma, we'll come to the domestic business in a bit. I'm glad to see that that piece is improving. But earlier you had indicated that you expect exports to revive July onwards. Would you hold on to that guidance? And apart from Nigeria, can you give us some trends on what the other export markets are doing, like Egypt?
Sure. So, the fundamental issue, as we have been saying, is actually, if I keep Nigeria aside, is actually the availability of the dollar now. In most countries, our stock covers are quite thin. Demand is lower than what it was last year, but it has improved. However, there is not enough foreign exchange for international trading. The central banks in most emerging countries are taking a very cautious view of how the Fed rates will unfold, and they're protecting their foreign exchange reserves for things like drugs, food, and stuff like that. Hopefully, when we say that we expect things will improve from July onwards, it is based on the assumption that the Fed will sort of taper off with its actions, and some kind of an equilibrium will set in by April, May, and that will sort of rest the nerves a little bit, and more dollars will be available for trading. Demand remains sort of intact, if not improving. In Nigeria, the issue was this, once and for year event of elections, which further dampened the business. So we are now getting out of the elections. It seems that the current party itself is going to come back. And hopefully, if the transition is smooth of the transfer of power, then again, let's say in a 1 or 2 months' time, that should also settle in. And therefore, we feel that another quarter and export should start to look up.
Mr. Sharma, hi, good morning. Your export run rate now is back at where it was, back in FY12, FY13. So it's, kind of tapered off quite a bit. So would it be right to say that the long-term potential for the export market remains quite strong? Or do you think that has also been sullied a little bit? Because as you said, interest rates are a major determinant of what happens to an economy, and some of these are emerging markets, vulnerable. It affects purchasing power, businesses locally, etc. So the impact may linger beyond April or so, as you said. I mean, the Fed may pause, etc. Rates may peak, but the impact in some of these export markets may linger for longer later this year as well. Your assessment?
See, if I take a longer short view of things, it's a very good question. And it is something which we keep asking ourselves. If I take a longer view of the overseas markets, the emerging markets, we've always felt that it's like a snake in a tunnel type of a growth. It's never going to be linear. There are going to be ups and downs. That is the nature of the emerging markets because they're pretty volatile and, little gusts of wind on the macroeconomic front cause a lot of disturbances. However, the fundamental drivers, they're very, very strong. The penetration of motorcycles in Africa, in Middle East, in Latin America is very low compared to, let's say, Asia or India. Secondly, the rate of urbanization, the way the roads are coming up, and largely, governance is improving around the world. The political systems are okay. You're not having civil wars, etc., apart from here and there. And finally, the penetration of retail financing on the back of digitization. And the demographics itself. The emerging markets, again, the population is very youthful. And in most of these markets, public systems of transport are way behind. So when you put all this thing together, then you will see that the demand drivers are very strong and the overseas markets over a period of time will continue to perform. But you've got to have the appetite for volatility because it will never be a straight line. It will be ups and downs. And we've been through these cycles before and we feel that the pendulum will swing again.
Okay, let's hope on that. But let's come back to the domestic markets then, Mr. Sharma. What's your market share as of now? Are you growing faster than the market? If you could tell us that. I think it was around 17.5%, 18%. So what's the updated number out there? Point number one. Point number two, EV sales. They were at around 2,500, 3,000 odd. You were telling us they're likely to scale to around 5,000 per month in quarter 4. Has that happened?
Well, on EV, we are now entering the scale-up phase. I can say that, our approach has always been to be driven by sustainable initiatives and not chase numbers. A large part of this sustainability is driven by supply chain surety, which is not just about the clarity of how the availabilities will be, but also costs. And I'm quite happy to say that, we have now completed a lot of restructuring of our supply chain, which gives us clarity of availability of about 10,000 units and over 10,000 units of Chetak kind of products per month now. We have also re-engineered the cost, which allows us now to play in different segments. So from tomorrow onwards, we will commence our scale-up phase. We are unveiling a new product, new Chetak tomorrow. And we are also, for the existing range, repricing our products. So I guess the heat will be on for competition from tomorrow.
All right, that's taking competition head on, right? You're unveiling the new Chetak tomorrow. Got that. Just want to, we don't have too much time. Just want to squeeze in one question. Since exports, there is a chance that it could weaken further. Things could take time to recover. On the margin front, I want to understand, is there more pressure? Because in Q3, your margins are very strong at 19% plus. You, of course, have tailwinds in the form of lower raw material costs too. But now with this export situation, could it put a lid on the gains for the margins? Further gains, that is?
Yeah, so that's exactly, the second part of what I was going to say for the previous question was, in our chosen segments in the domestic business, we are seeing very good growth. The new pulsars are doing very well. The 125cc, we continue to increase our market share. Though at an overall level, the market share seems steady. But in our chosen segments, which are the upper half of the industry, our market share is improving. As a result of which, and the three-wheeler business has come really charging back with the market share at, at 78% now. And when I put both these things together, the richer mix is a very, very welcome impact on the bottom line. So the reduced sort of weightage of exports is hopefully getting offset by the richer mix and the larger volumes in the domestic business, both in three-wheelers and the better segments of the motorcycle business. And hopefully with the costs sort of remaining steady in the next quarter, we are not seeing too much of sort of changes on the margin front.
All right. And two-wheeler market share, sir?
Like I said, the market share at an overall level is holding steady. But if you look at the upper half, which is 50%, which is the 125cc plus segment, there we continue to add almost a percentage of market share every quarter. And that is where we have a very strong focus.
All right, Mr. Sharma, thank you very much. And you said, you began by saying that March also, the numbers should be around the Feb levels, right? Which should be about 2.8 lakh units or so. So it should not be, significantly lower or anything, as the report indicated. The report said between 250 and 270,000 units. Well, Mr. Sharma, thank you very much as always. It's a pleasure. Appreciate it. Time for a quick break now. Up next, Irfan Razak of Prestige Group will join in to talk about demand trends in the real estate space. Later, we'll also have Prashant Jain of JSW Energy to discuss outlook on power prices ahead of the peak summer demand. Stay tuned for both those conversations.
Co-presented by